Yesterday was green across the board, as you can see from this heat map behind me. Tech stocks, big tech stocks like Tesla, Amazon, and Google in particular really did rise by a hell of a lot. And actually, most industries rose. There are only a few that didn't perform too well. Utilities and real estate and healthcare weren't stellar, but pretty much everything else was up across the board, including markets from other countries as well. Energy stocks were up by about 3% on average. Tech stocks were up by as much as 5% on the high end, and financials were strong as well. On the whole then, the S&P 500 rose by about 1.5% for the day, the Nasdaq rose by about 2.2%, the Russell 2000 rose by over 2%, and the Dow Jones rose by 1.1%, so it was a very strong day for American equities in particular. Now, the worry here is that actually maybe this is a dead cat bounce, and frankly, I have to agree with that sentiment. Was there any really strong news that forced markets up like this? No, not really. Did we get any new data suggesting that inflation has fallen back down, or that the economy is really strong, or that good times are coming in the future? Again, no. Unfortunately, we're really just waiting for the US jobs report to see if it's good or bad. The problem is no one really knows what is good or bad. If jobs come out strong, then historically that would be good for the economy, but that's also bad for inflation, so that should be bad for markets. If jobs reports are bad, then historically that would be bad for the economy, but that might be good for inflation, and it might show that the Fed's tightening is working, so that might be good for markets. So things are all a little bit backwards right now, and I don't expect this rally to continue. Across the rest of the world, it was a similar sort of story as I just said. Stocks pretty much everywhere were up. China and the rest of Asia was really strong, as you can see from this bright green behind me. The rest of the Americas were strong. Europe was strong as well. The FTSE 100 rose by 1.3% for the day, and the Stoxx 600 was up by 1.9%. And then on the whole, the MSCI World Index rose by 1.1%. But again, there wasn't really anything driving this rally, just weird investor sentiment changing on a whim. Now, as equities were strong, the idea that the dollar behaves as a safe haven means that actually the dollar wasn't too strong and it slightly weakened, falling by about 0.2% against an aggregate of its peers. The euro is sitting still at about $1.02, getting very close to parity and sitting at about a 20-year low. The pound is at about $1.20, still sitting around that 2-year low, and again, weakening in general. And then the yen is still sitting at 136 yen per dollar. In the world of the bond markets in fixed income assets, well, the yield on the 10-year treasury rose by about 7 basis points to 2.99%, getting very close to that 3% mark. And then in the world of commodities, well, we saw oil prices rise once more just above $100. WTI crude is sitting at $102 and Brent crude at $105, which explains why energy stocks rose for the most part. Then finally, for traditional markets, gold strengthened very slightly and it's sitting just above $1,740 an ounce, still comparatively a very low level to where it's been over recent months. Finally then, for the crypto markets, what did we see happen over there? Well, actually a relatively strong day. Bitcoin sitting above $21,000 after rising about 5%. Ethereum up by about 3%, above $1,200, and most altcoins up for the most part, not by ridiculous amounts, but 1, 2, or 3% really wasn't too unusual for the day. Now, was there any particular piece of news driving this increase in the crypto markets? Well, again, no, there wasn't. This is likely just crypto behaving as a risk-on correlated asset, as we've seen over recent months. There's actually been some slightly bad news coming out of the crypto markets. Celsius, that whole mess of a company, is now being sued for fraud by one of its former employees. There are loads of other firms and investments in crypto still going under, so no good news there. Now, we did get some news coming out of China, which is shaking markets quite a bit. No one really knows what to make of it yet, and we don't know if this is 100% confirmed, but it seems like China and the Communist Party might be pursuing this massive economic stimulus change, where they're sort of entering the world of quantitative easing by releasing $220 billion worth of bonds with the idea of stimulating construction and infrastructure projects within the country from now until the end of 2022. And then this would, of course, continue into the future as well. Now, what people are trying to work out here is firstly whether or not this is true, because it is mostly rumors at the moment, but it does seem to be coming from credible sources. And then secondly, whether or not this is the end of the fiscally responsible Communist Party of China. If you remember back to 2020, Cathie Wood, for example, a very infamous investor, bet big on China for the main reason that actually they were rather fiscally responsible throughout the COVID pandemic and they didn't go out printing huge amounts of money as the rest of the West did. Maybe this is the start of the end of that though. Now, as I said, these bonds are intended to stimulate infrastructure. Now, as I mentioned just a moment ago, these bonds, their intended purpose is to stimulate infrastructure projects, to stimulate spending, and to push the economy further like that. Now, this is a very common theme for China. It's very similar to their Belts and Road initiative, which has seen them build millions of miles of railways and roads to provide jobs for people in the country and to enable economic growth to take place. The problem is, though, a lot of this money seems to be going on wasted projects, and this isn't a new thing either. There are roads to nowhere, cities with no inhabitants, and an awful lot of things like that in China. And these sort of projects do stimulate GDP, but as an old economist saying goes, if you want a $1 trillion economy, build a $1 trillion bridge. That doesn't necessarily mean that actually the economy is thriving just because GDP is growing. Now, why is the Communist Party targeting this? Why are they sort of turning around on a dime? Well, because their economy is under an awful lot of pressure right now. They've had the tech crackdowns, which have really hampered their most important, their most valuable companies in the world, like Alibaba. They have a dying housing market, which is suffering from an absolute collapse that has been sustained for about a year at this point, and it doesn't look like that's going to turn around anytime soon either. And then, of course, there's the fear that there's a worldwide recession coming across every other country in the world, and China being a massive exporter of consumer goods to those countries, well, there's worries that China's exports are going to be damaged by this lacking demand into the future. Commodity prices have reacted positively to this news, though. The idea obviously being that if China is going to be spending a lot more money building more infrastructure projects, well, then there's going to be increased demand for commodities. Copper prices are up 5% on this news alone. Tin is up 5%, and most other commodities are following that same sort of idea. This is, of course, not the end of this story. It's going to take some time for us to find out exactly what is going on, but I wouldn't be surprised if the Communist Party do go in this direction. It would be mostly on brand. They've been worrying about the economy a lot recently, and quantitative easing does seem to be the go-to for any government that's trying to change the way things are going. Now, in some corporate news, we got something pretty major coming out of GME or GameStop, a fan favorite stock here on YouTube and on places like Reddit in particular. And actually, what is the news? Well, they're firing their CFO, their chief financial officer. They're replacing them with this woman who's been with the company for a bit, who's supposedly going to be more hands-on and more direct in her leadership of this company. And GameStop is also going to be making some big cuts and laying off an awful lot of people, trying to turn the company around and bring them forward into the future. Now, the company is actually in a really tough spot, despite what a lot of the memes might make out. And the company's been in trouble for quite a while now, as every brick and mortar retailer has been. You know, companies like HMV and Blockbuster, they are older businesses in a modern day. They're just never really going to thrive like this. And so GameStop has been working on this idea to digitize its business, to move it online, to become more of a video game retailer, maybe something akin to Skeen, as opposed to a brick and mortar store where you literally go and buy your CDs. The new CFO is supposedly going to spearhead this change. Now, I personally think this is good news. Now, what do the markets think? Well, the share price of GameStop is still ridiculously high, sitting at about $135 per share right now, which if you ask someone, 3 years ago where GameStop would be, pretty much no one would say it would be here. It is, though, down 5% pre-market on this specific news here, and I'm not sure that's actually too warranted. I think this is sort of good news. The previous CFO really wasn't making progress quick enough, and this is an innovative, aspirational plan to try and bring it into the future. They're making cuts to staff, which is always hard to see, and it's bad for those people who are going to lose their jobs. But moving into a tougher economic and a tighter monetary environment while making cuts to your staff, well, it's just a natural thing that helps a company move forward into the future, and it often makes them more efficient as well. This company needs to adapt, and frankly, that's what I see from this plan. Now, in another bit of corporate news, we have TCS and their earnings. Now, this firm you probably haven't heard of before, but it's Tata Consultancy. It works in informational technology, IT kind of stuff, services like that. It is absolutely huge in India. It's absolutely huge across the rest of Asia as well. I believe it's the largest singular IT services company in the entirety of that continent, so it's by no means a small fish. Now, they had their earnings, and in short, it wasn't very good. They missed their targets across the board by about 3 or 4%, and it really doesn't seem like it's doing too well compared to where it should have been. The idea that's going around investors and analysts and things is that basically it's seen as a bit of a bellwether for the IT industry into the future. Of course, we're starting to enter earnings season, and this is one of the first to come out, and it being bad will be bad for its competitors as well, people who work in that same industry. It's unlikely that it will be the only firm to suffer as a recession starts. It's a little bit unlikely that if they're suffering due to reduced consumer demand or business demand and things like that, that every other company working in that same industry is going to miraculously be okay. As a result of this, there's quite a lot of negative sentiment surrounding tech companies right now, and I do think it's justified, unfortunately. And I think as we go forward into the future, it's going to continue to be justified as well as tech companies miss their earnings by and large. I do think that growth is finally starting to stall as we actually enter this massive recession that we've been expecting for a long time now. Now, that is it for the corporate news today, but of course, I'm going to talk just a little bit about Shinzo Abe, who was murdered yesterday. Now, he was the ex-Prime Minister of Japan. He left a couple of years ago in 2020. He was working on a campaign for his party, and he was shot by some random guy with a makeshift homemade double-barreled shotgun. It's a really bit of a weird situation. He has been killed. It's really unfortunate, and the motive isn't entirely clear at this point. Now, full disclosure here, I'm not 100% sure if or how this will impact finance or the markets, but I do think it's interesting because this is the man behind Abenomics, which is this whole idea around quantitative easing, money printing, and fiscal stimulus to try and stimulate growth in an economy that was tried over basically the last decade in Japan. It's a very interesting principle. If you are interested by that stuff, I recommend you go and read up about it a little bit. In short, though, it was developed by this man's government to try and help Japan's economy finally grow. Of course, that entire country's economy has stagnated for about 4 decades now at this point, and this was an attempt to bring it forward using quantitative easing or money printing and loads of fiscal stimulus, or the government just spending loads of money, and then finally some removing of some structural barriers to business and things like that. Now, was it actually successful? Well, this is a very debatable topic. In some metrics it was. Personally, though, frankly, I don't think it was successful. I don't think it's going to become the standard for economic policy by governments around the world, as Japan is still pretty much in the exact same situation it has been for the last 4 decades. If you enjoyed this video, then make sure to like, comment, and subscribe to bless the YouTube algorithm. It really does help. If you want to join our exclusive community, then check out our Patreon. You get access to our Discord server and extra content like access to my portfolio and buy and sell alerts for all my own investments. Also, make sure to check out the link in the description to Masterworks. It can help you protect your portfolio against market turmoil through fractional shares of art from world famous artists. Art has historically proven to be uncorrelated to the markets, so it's a really valuable resource with the markets falling every week. There's also a link in the description to I Trust Capital, which helps you to invest in crypto through your tax-advantaged IRA, which could literally save you thousands. If you, like me, think crypto going down is a buy-in opportunity, then now is the perfect time to join I Trust Capital. Thank you all for watching. Stay stoic. Until next time.